All right.
Alex Mashinsky, how are you?
Great. Thanks for having me back.
It's great to have you back. We've been following your success very closely. Congratulations.
Well, you have to thank the community. Our entire success is really the support we're getting from all the users worldwide.
Well, I'm going to step out of the way, let you do your thing here. I'm excited to get an update. You've been with us since 2017, 2018, and we appreciate you for your support. And once again, thank you so much. It's incredible what you've been able to do since those days, and I'm looking forward to a refresh.
Sure. Yeah. So thanks for having me back. I'll present my slides in a minute. Just I think I visited. I came to Florida to do in-person presentation in 2018 and 2019, right? If I remember correctly, and we had less than $200 million in actually in assets back then. On January of 2020, we had $500 million in assets, and we're happy to report that we just crossed $21 billion in assets. So we've paid almost $700 million in interest to 750,000 users worldwide, and really super excited again about the adoption and the support that the community has given us. I think you need to unshare for me to present. Here we go. Thank you. So I'll share some of the slides, just making sure you can see.
Yes, we can see them.
Okay, perfect. So a lot of these slides are the same, but the narrative has changed. And my background again is I was one of the first guys to kind of, I wrote the protocol for voice over IP back in 1994. And obviously the internet did everything else. You didn't have to work too hard to convince people to use voice over internet. And I'm telling you the same message. You're not going to have to convince people too hard to use money over internet protocol. The question is, what are those killer apps? What are the things that are going to drive adoption? And obviously, Bitcoin as the kind of the granddaddy, the store of value is an obvious application. But another one that we, I think, created, we invented the whole idea of yield. And I can tell you there were a lot of skeptical faces when I was presenting this in 17 and 18 and 19. But now everybody realizes that if you want to earn yield, you have to do it on the blockchain. You have to do it with DeFi. And Celsius really invented this whole class, right? Celsius created this whole category that didn't really exist before. So the driver here is really, again, this migration from centralized institutions that are toll collectors, right? They decide how much they pay you for your money. And the aggregation of the wealth, the aggregation of all of the value is at the top of the pyramid. Versus the decentralized world, right? The Bitcoin world, where everybody has equal access, everybody has an opportunity, and if you are, you can basically rewrite the rules. For example, the main rule we rewrote is that while banks and financial institutions deliver 80 or 90% of their earnings to their shareholders in terms of dividends or stock buybacks, Celsius decided to give 80% of its earnings to its depositors, right? An unheard of phenomena where you would be sharing so much with your depositors. So that's really the secret to our success. Also, the fact that the Fed has been printing money like crazy obviously doesn't help. Since I was in Florida visiting with all of you guys, the Fed has printed another $4 trillion. And the government has printed another $7 trillion with a T, right? So Obviously, all of this, the decrease in yield, the yield's going down to zero, plus the inflation and the debasement of the currency are driving more and more people into digital currencies. So if you look at the last 100 years, or actually the last 3,000 years, you will see that one after the next, we had the empires who came and went, and they all ended up losing their status as a reserve currency of the world. And again, unfortunately, I'm a proud American, but I can tell you that the way we are mishandling the dollar, we will be just another footnote in history, just next to the Brits and the French and the Dutch and so on, so on. So, and what's going to replace fiat currencies, and there were 700 fiat currency, most of them lost all their value, is going to be something that has limited supply. It might not be Bitcoin, but it's got to be something that is as digital, that is a digital currency and has limited supply. And the traditional banking model that is based on fractional reserves, the ability of banks. Now the Fed requires banks to keep zero. It used to be 10%, now it's zero of their depositors' money in the bank. And basically they can take any asset that they have, doesn't matter if it's a junk bond, deposited with the Fed and get 100 cents on the dollar on that. So that's obviously, yes, it creates a lot of liquidity in the system, but at the same time, there's no moral hazard. There's no kind of like, there's a safety net that catches the zombie companies, the bad companies, and the good companies. And so the world has about just over 260 trillion in assets. The problem is that it also has almost the same amount of debt. So almost half of all of the capacity worldwide is this giant chain ball that we all have to carry around our necks. And basically with Corona and all the other things that are happening, there's less and less of a chance that we will actually to be able to repay all of that. And if we cannot repay it, we're going to have to debase the currencies. We have to roll over all this debt. And that's why many people, the smartest people in the world and the richest people in the world, are trying to effectively escape the dollar denominated assets. And that's why you're seeing a huge increase in the price of Bitcoin and other digital assets, which are the only things effectively that are not denominated in dollars. We've seen huge consolidation in the banking world. With that, we also, if you look at the gray in the background, you'll see there was a huge decrease in the rates that banks pay you. And again, I always joke that it's not that Celsius network is so great, it's that the banks have been abusing their relationship with customers. And so for Celsius to come and offer, we pay 10% yield on the US dollar. You just have to go tokenize it, where you can buy digital dollars from Circle, from Coinbase, from Gemini. There's probably a dozen companies you can get it from, and Celsius then will pay you 10% a year without you having to do anything about it. And another way of looking at it again is, since we went off the gold standard 1971, you've seen this huge bifurcation in incomes. If you were in the basically computer world, or if you were in anything that has to do with microprocessors of tech, you did exceptionally well. But if you were in the other part of the economy, you stagnated. And the separation between the haves and have-nots has basically grown continuously. And sooner or later, we're going to have to pay for this. We can't just continue creating this type of gap between the have and have-nots. Talking a little bit about digital assets. So they come in three different forms. You have cryptocurrencies, you have utility tokens, and then you got security tokens. The security tokens segments hasn't really taken off. Not much is happening there. But on the digital slide, and funny, this is the same slide I presented in 2018. Not much has changed since. Celsius chose to focus on cryptocurrencies and stable coins. Now NFTs are coming back, but our focus is really on providing again, yield on all these different assets. That's about $2 trillion worth of assets that are in circulation today. And again, the blockchain, if you look at it, what is the blockchain? It's a very unique way of exchanging value, storing value that, again, bypasses all the traditional rails. And because of that, it allows you to basically be able to offer new services that are not possible otherwise. I view it almost like a tank that is only good at one thing or two things, and you have to make sure you use it properly. If you don't use it properly, you can cause a lot of damage. So we had three waves of innovation on the blockchain space. Again, the blockchain technology itself is 30 years old. It's not something a lot of people think that Satoshi invented the blockchain. Satoshi invented Bitcoin, but the blockchain has been around for 30 years or more. And what Satoshi invented is this, again, proof of work, which really put together the right incentives and allowed, again, these three waves of innovation: infrastructure, middleware, and dApps. And again, the winners and the losers here are going to be the people who can scale and who can provide services to billions of people worldwide. And we've seen in the last year major institutional adoption. So we went from retail to crypto funds to market makers, and we're now seeing the traditional asset managers, the investment bank, and even a few pension funds coming into the space. We're just at the beginning of that process, but basically, again, we're seeing the completion of all the different traditional guys kind of entering the space, which is great to see. And again, that should continue driving more and more assets into the space. Also, from kind of like, what problem are we solving? I view it in a visual way, like, again, migrating people from their comfort zone to being able to, for example, take advantage of tokenized gold. Celsius pays 5.5% interest on gold on gold, right? So you can basically, instead of buying GLD, or instead of buying some other asset that has that barely tracks gold, now gold has positive yield. And we support Pax Gold, we support Tether Gold, we support coin shares. So you can pick the asset you like best, or diversify between the three of them, and suddenly earn yield. Again, here you have the next migration is stable coins. So Tether or USDC are good examples of that. There's about 50 billion in circulation of all of these different stable coins. And the third zone is more the risky ones, which are more either Bitcoin or Ethereum, or the altcoins, which are some of them earn higher yields, but obviously they're much more out there as far as the risk reward, the way risk reward is done. So if you look at cost of transactions, again, today, the blockchain represents the cheapest way to move value across the world, especially if you're using Swift or wire transfer or anything like that. And Celsius has a free service called CellPay that allows you to actually send anyone on the planet any payment. You can send them $1 billion if you wanted to, and it actually does not cost any money whatsoever. Celsius makes all of its money on generating yield, and we provide all the other services effectively for free to our community. So we had 4 waves of adoption in crypto. The first wave was, again, Satoshi kind of inventing Bitcoin and giving it to the anarchists, right? Or the cypherpunks, who effectively kind of toyed with the idea, tried to figure out what is it good for, and they had to hand off the baton. There was just not enough cypherpunks or anarchists. They had to hand off the baton to the libertarian. The second wave was a wave of libertarian. There's probably about 2 million people that joined, kind of trying to use Bitcoin to make the world a better place. Again, not enough of those. They had to hand off the baton. And then we had speculators, right? We had tens of millions of speculators join in and realize there's limited supply. So if just enough of us join in, we're going to raise the price of Bitcoin. And that's what happened in kind of 14, 15, 17, and partially of what's happening right now in 2021. But even they had to hand off the baton to the institutions. And it's not clear how many institutions are going to join, and are they going to hold their Bitcoin. As an example, Tesla in the last quarter sold over $300 million of their holdings so they could deliver profits to their shareholders. Tesla made more money on Bitcoin than it did in its entire history as a public company, right? So that just shows you a good example of what a good investment is worth, and they're effectively using it as a cash cow to kind of fund some of their yield. Also, again, on the software side, we had 3 waves of adoption. We went from centralized software, if you think of Microsoft as kind of the main player there, to open source or Web 2.0, where both Java and some other open source programs, Apache and all kind of other programs have basically dominated the internet. And now we are moving to a third wave, a new wave, which relies on open source, but it really is a decentralized version of open source that allow anyone, right, one person to deploy a protocol and have it change the finance world forever. And I'm not talking about Bitcoin, I'm talking about the DeFi protocols where you could effectively create a copy of Citibank or a copy of Chase Bank or whatever by just deploying code into the world and having other people use it for transactions or for yield. So the previous speaker was talking a little bit about what is a blockchain good for, or which projects are going to win. And I can tell you that the key rules here for success have not changed. This is, again, the same slide I used in 2018. You need a decentralized app, you need a great token economics, and you need a secure and immutable infrastructure if you want to scale, right? And I can tell you that, again, people laughed at me when I said I can pay 10% yield consistently on dollars, where they were getting 0.1, 0.2% from their bank. That's 100 times more, 2 orders of magnitude more than your bank pays you, right? So people said, yeah, you have 50 million or 100 million, great, you can do it, but let's see if you can do it at $1 billion. Well, you will definitely won't be able to do it at 10 billion. So our rates actually have gone up. We used to pay 6%, then we paid 8%, now we pay 10%. And the reason the rates are going up is because there's insatiable demand for dollars in the crypto world, because the banks do not support crypto. For example, I have an account with Merrill Lynch. I asked them to buy GBTC, which is a publicly traded security that kind of tracks the Bitcoin, and they refused the transaction. They said that the bank does not support trading in GBTC. I'm not even sure that's legal, but it just shows you the amount of effort that banks will go to try to kill their competition. But I can tell you cannot compete against a decentralized world where the value of money is actually priced by the open market. On the blockchain, dollars are being valued based on how much good they do. And today, the yield for dollars is 10%. That is the value that dollars create every day, every week, every year on the blockchain. In the real world, your bank tells you that you should only be paid 0.1%. So they are basically holding back 99% of the money that you should be earning. There's just no other explanation to what's happening. So again, talking about economics, Ethereum, really the success of Ethereum, right? It's worth several $100 billion. is really based on the members, the size of the community, or M, and how much credit or how much activity happens in that network. And today, if you actually did a DCF on Ethereum, you would see that it's actually not that expensive, considering how much activity is going on through the network. So what's happening every day is that crypto is just eating up all the different asset classes around the world. I didn't update the slide. As you can see, the market cap back then was 2019. Market cap was 500 billion. Now we're at just under 2 trillion. And I think we made pretty good job at kind of eating into the gold circle and eating into the physical money side, right? So at least at least $50 billion worth of gold or $100 billion worth of gold went into crypto, and at least $100 billion worth of physical money or digital money, dollars, went into DeFi. So these are all indication of how far we have come and what's coming out next. Again, we're still kind of like in the middle of the hype curve. So yes, there's a lot of hype around crypto, but I think we've went through the main part of the cycle. I think now we're kind of flushing out what are the real opportunities, what are the where the money is going to be made, which ones are the successful companies. And to cross this chasm of mass adoption, right, to find the next big thing, you need to really find the killer apps. And in this case, again, we tried security tokens. It didn't really work out too well. Not a lot of adoption there. Rules and regulations for securities in general is very, very high. You layer on top of that all of the token economics and other rules and regulation related to tokens, and basically you can't get anything done. So the reason, the other option was to go with Libra or Diem. That's the Facebook kind of solution, and we've seen Facebook retract completely and effectively adopt the business model that we predicted back 3 years ago, which was that we would just end up with stable coins pegged to the dollar or to some other currencies. And this was our choice back in 2018. Obviously, Celsius today has several $1 billion worth of stable coins in circulation. And we're currently adding over $1 billion a month in new assets, and a big chunk of that is stable coins. So you see Facebook basically is going ahead and creating a new stable coin that looks just like USDC or TUSD or any of the existing ones.
So, hey, Alex, this is Jeremy. You have some questions. Did you want to push them to the end, or did you want to take some in the middle?
Let me finish the slides and we'll go through them. Yeah.
Okay, cool.
I'll answer them. So again, the banking model, for example, on credit cards, basically they charge you 24% when you use your card, but they pay you less than 1% when you make a deposit. So the bank gets to keep 95% of the economics, and just because they are the toll collector, right? They are the ones who hold the license, and if you want to compete with them, you can't, because you have to have all their infrastructure to offer any kind of competitive product. And in the Celsius world, where we unbank the banked and bank the unbanked, we give 80% back to the depositors. So we charge 9% instead of 24%. We only do asset-backed lending, and we pay depositors anywhere between 7 and 10%, depending on the asset that they provide us. So again, our app is available worldwide. We have customers in over 200 countries, and we've, like I said, have over $21 billion in deposits. And our economics are very simple. The more assets, the more users we get, the more assets they entrust with us. We effectively do what's called sec lending, or secure. We just do it with tokens or with coins. So we lend those to institutions. The institutions pay us interest, and we give 80% of that back to the community. Similar stuff to what your broker does with your security, is it just that they keep all of the SEC lending income to themselves. So again, Celsius compares very well to commercial banks or to other competitors in the space who are not really acting in your best interest. I, as a personal user, I'm the largest user of Celsius with several $100 million of my own money there. And that's why basically I make sure that the company does everything for its customers. I'm the largest customer of Celsius. We have great coverage, won every award. Again, if you want to go on Google, you can find all that stuff out. Forbes also lists us as one of the top users. And the guy that invented the blockchain, not Satoshi, the guy that invented the blockchain is Scott Stornetta. He's on our advisory board. And Satoshi on page 9 of his white paper actually refers to Scott several times for inventing the blockchain. So again, our system is a pretty simple system. We take coin deposits on one side, lend them out to institution on the other side, collect interest, and distribute most of that back to our community. And just few things to remember, VoIP to MOIP, right? Exchanges are here to effectively socialize losses, right? When you see Coinbase or other exchanges announce that they've made billions of dollars in profits, these are all fees they charged you, where Celsius is charging institutions and exchanges for the liquidity and is socializing the profits, right? We give you back 80% of the profits. And decentralization is a war between toll collectors and users, and you have to decide who do you think is going to win that war. Next 100 million users are all looking for less volatility and more utility. And that's part of what we provide. Consistent yield, we pay interest every Monday. We've been doing that now for almost 4 years. You have to think of Bitcoin as doomsday insurance policy, right? Right now, it's still pretty correlated to the stock market, but I think we're going to see that decoupling happening pretty soon. And stablecoin, again, provide everyday interest. Crypto is here to replace the middleman with middleware. And the prediction, Bitcoin replaces gold, Ethereum replaces the banks. Living with the banks is like living with bad marriage in a bad marriage. So again, I'm exaggerating here, but obviously the current financial institutions have gotten very, very comfortable with the idea that they can just continue charging their customers whatever they want and nothing bad will happen. And right now, a lot of things that they thought could never happen are happening every day, with decentralization hitting them from all directions. Bitcoin is a deflationary currency, right? It has fixed supply and a very, very fast growing user base. And that's why the coin value increases over time. And it's competing against fiat currencies, which obviously have unlimited supply and being printed like crazy. About 21 million Bitcoins are going to be created. About 4 million of them already got lost. People lost keys, they don't have access. So that's part of why it's deflationary, even though new coins are being created. The Fed is not your friend. Low inflation is good for the people already rich, and low unemployment guarantees that there's no revolution. But you have to understand that the banks who just give you an IOU for your money are not credit worthy, right? A lot of them have, even though they're extremely profitable, you can look at the valuation, the multiples that they're trading at, and Wall Street is telling you, we don't trust these guys, right? While the average tech company is trading at 30 times multiples, 30x, most banks have stayed at that 10 to 12 multiples. Also, the US dollar is not your friend. Why? Dollar is a bad store of value, but a great form of payment. And Bitcoin is pretty bad as a form of payment, but it's a great store of value. And all this debt we're creating is, again, us borrowing from the future, reaching out to the future, reaching out, taking a loan from our kids who are going to have to repay all these things. And so don't ask what the banks or the government can do for you. Ask what crypto can do for you. All right, I think we are done.
Okay, you got a number of
Yes.
questions up here.
Sure, stop asking what Satoshi can do for you. Ask what you can do for Satoshi. So, all right, so I'll stop presenting, and I'm happy to take questions.
All right, so will the slide deck be available?
Sure, yeah, we can, we'll upload it or send it to you guys.
Okay. Let's see, the 10% yield you provide, is it monthly, quarterly, or yearly?
So we pay every week. The yield can change, but again, recently it's only been going up, but basically you get paid every week. There's no lockup. You can withdraw all of your funds at any time. You can deposit them in the morning and withdraw them in the afternoon. There's no lockup of any kind.
Okay. How sensitive are stablecoin lending yields to performance of popular cryptocurrencies? What drives the difference between rates of USDT and USDC versus fiat?
Yeah, so Celsius does not take any directional bets. We're not a hedge fund. We're not a prop desk. We're not a high frequency trading shop. All we do is what equivalent to SEC lending. So we do very well when there is a lot of volatility, which in crypto is effectively all the time. So the rates we pay have to do with how much our counterparties are willing to pay to borrow these assets. And, you know, rates on Bitcoin have been pretty consistent between 5 and 7%. And rates on stablecoins have varied between 8 and 12% for the last 2 years.
Let's see. So since you are taking custody of digital currency, are you a custodian as you are holding the assets?
Yeah, so we use multiple custodians based on jurisdictional and legal requirements. So we use Anchorage, we use Fireblocks, we use Prime Trust, and so on, so on. So we have half a dozen custodians. And but most of the time, the assets are not sitting in custody. If somebody tells you that they're paying you interest while assets are sitting at in BitGo, you have to ask yourself, well, where is interest coming from, right? So at any time, 80 to 90% of our assets are deployed with our counterparties, our borrowers, and our job is just to make sure that these are trustworthy, credit-worthy borrowers who will pay. Return the asset and pay the interest that they owe us. By the way, in 4 years, we have not had any defaults, and we have not had a single instance where a counterparty did not pay us interest or did not return the asset. And this includes 3 or 4 flash crash events, including one last year where Ethereum, for example, Ethereum was down 60% on March 12th, 2020, right? In about 12 hours, Bitcoin was down 40%. We had hundreds and hundreds of margin calls, but no defaults.
Okay. Who's your custody providers, and do you have any insurance?
Yeah, so our custody providers have insurance. Fireblocks, for example, I think has 30 million. Prime Trust, I think, has something like $100 million. But again, all these things apply to cold storage and hot storage. So while the coins are in transit, they are insured. But once they are lent out to an institution, you're taking the same counterparty risk that your bank is taking when they take your money, give you an IOU, and then they do lending to counterparties. So we don't have FDIC insurance like the banks, but I can tell you that if if there's a problem with this or that bank, FDIC cannot cover even one U.S. bank, the default of a single large U.S. bank. So that's why we have to constantly reflate the entire economy when there's a financial problem, because we can't bail out all the banks or all the financial institutions. So, but we don't have FDIC insurance.
So this is actually a question I often have. Someone says they've been a holder for a while. Great info as always. Can you speak to the potential regulation of unbanked and DeFi? Like, what do you think how the regulators will come at DeFi?
Yeah, so unlike almost everybody else, we filed a Reg D filing with the SEC back in 2018. We are filed with FinCEN several times with the SEC. We got a provisional license from the FCA in the UK. So we don't believe in this idea that many DeFi guys believe that, oh, we don't need to be regulated. We don't need to do, and we don't need to even talk to the government. We're gonna base ourselves in the Seychelles Islands or the Solomon Islands or whatever, and pretend like none of these rules apply to us. So Celsius believes that we do have to stay compliant. We do have to work with regulators, and we've answered every regulator, every question. And unlike many others, we've never had like a subpoena from the SEC or anything like that, because all these institutions, all these regulators know who we are. We're not hiding under a rock.
So we have a question about Elon Musk. What do you think will happen to his power in moving Bitcoin's price in the upcoming months?
Well, look, the fact that Elon says, I'm not going to sell you cars with Bitcoin doesn't mean anything. I mean, that's not, I don't know how many cars he sold with Bitcoin, but it's not a lot, right? So the main kind of influence Elon had was the fact that he was the largest public company, the only S&P 500 company to agree to take a portion of their balance sheet and buy Bitcoin with it, right? That was kind of like the main breakthrough that he represented. So him saying, oh, I'm not gonna sell cars anymore, I think was overblown. That's not a problem for Bitcoin. Bitcoin is not relying on selling Tesla cars to go up or down in value. So is he an influencer? Of course. Is he positive to Bitcoin? Yes, he is. But I don't see Elon doing something or not doing something as material to the long-term viability of Bitcoin or Ethereum or any of the other. He's still trying to figure out what is what. I mean, he's still learning, oh, I got on the Doge train. It looks like it's the wrong train. Let me get off. Let me see where the next train goes. So he's just now discovering proof of work versus proof of stake, energy and security requirements, and so on. So, again, I'm not worried about Elon.
Capel wants you to elaborate on yield in layman's terms.
Yeah, so your money used to make money, right? I mean, I came to the United States over 30 years ago, and I remember like today going to Citi, depositing some of my dollars and earning 7 or 8%, right? So banks and the Fed used to pay you real value for your assets. All of that effectively disappeared because we, the United States, have so much debt that we cannot afford to pay everybody 7 or 8% on all that debt. So we lowered rates to zero, and now there's nowhere you can earn yield. Now the banks continue to earn record profit. They can pay you 5 or 6%. They just choose not to. And because you cannot get yield from the banks, the yield on dividends is actually much lower than it used to be. Again, because asset prices went up, there's nowhere where you can earn money on your money, right? Unless you're taking a lot of risk. And what DeFi represents today is probably the safest place where you can earn high yield with low risk, right? Not all DeFi, but you have to be very selective. You have to know what you're doing. But the safe parts of decentralized finance represent opportunities to earn anywhere between 5 and 10%, and taking much less risk than you would take if you try to earn the same kind of yield by buying a CBD or by buying some other security or a bond, a junk bond, which will earn or yield the same type of rate. So it's an issue of risk versus reward. How much risk am I taking? How much yield or interest income I'm generating? And today, DeFi or Celsius are great alternatives to the other options that most of us have to choose from.
How much do your yields depend on users staking their coins with you?
So 100% of our yield comes from coins that our customers have given us, right? You effectively lend us coins. We aggregate all the people that have Bitcoin, all the people that have Ethereum, all the people who have stable coins. We have giant pools. We have over 110,000 Bitcoin, almost 1.5 million Ether, right? And we are the largest pool. So if you are an institution, you're trading, you're doing arbitrage, you're doing market making on different exchanges, and you need access to Bitcoin or Ethereum, you have to come to Celsius. And we will tell you, hey, you got to pay us 8% or 9%. So that is that's what we've done, really aggregate retail to have giant pools of these assets and then force the institutions, exchanges to pay us fair value for these assets, where before you posted them, if you have your money on this or that exchange, you're giving it to them for free. All you have to do is move it over and start earning on the same coins that you're giving to them for free.
Wow. Can Celsius hold IRA assets?
Yeah, so you can open a corporate account using your IRA and then have effectively a tax-free transactions. Again, there's a lot of rules and regulations. So you have to make sure that your IRA provider, or you open your account with a provider that supports crypto. And for us, we support both corporate and retail users. So there shouldn't be any problem with using your IRA for this with Celsius.
Are you lending coins so people can short them?
So first, we don't lend at all to retail. If you are coming to us as a retail user, the only thing you can do is do what's called margin borrow. So you give us, let's say, 1 Bitcoin, and we'll give you up to 50% or $25,000 more or less against 1 Bitcoin worth 50,000, right? So that's the best you can do. We're not going to lend you Ethereum or Litecoin or stablecoin. Well, stablecoin, yes, because it's a dollar loan. But the point is that these loans that we're talking about are really to institutions. And what mostly institutions do is not try to bet that Bitcoin is going up or down. What institutions do is they see, okay, the price on Coinbase and on Kraken is not the same, so let me sell it here, let me buy it there. And to do that activity, they need to borrow a lot of coins. That's all we do.
Okay. What's the ratio of deposit assets when you compare stable coins to other cryptos? Have you seen a pickup in DeFi token interest in 2021?
Yeah, so about 20 to 25% of our assets are stable coins. So again, 21 billion. So that would be, again, between $4 and $5 billion worth of stable coins. And unlike banks that have 10, 20, 30 to 1 leverage, right? The amount of money they lent out is between 10 to 30 times what they have in deposits. Celsius always have more on deposits than loans it issues. We're not a bank. We're not allowed to use fractional reserves. And for example, our retail loan book has a 23% LTV, loan to value ratio, right? So we are very, very safe compared to many of these crazy financial institutions that take huge leverage and basically risk your assets with just giving you an IOU. So I think that business model is a much safer and more reliable business model. And we've proven that we can pay high single digits or low double digits in the yield using no leverage whatsoever, which just makes you ask, why do banks need 20 or 30x leverage?
Okay. What's the counterparty risk? Have there been any defaults by borrowers? And how do you check their credit?
Yeah, so like I said before, we had no defaults. We only lend to the very largest institutions. So these would be tier 1 or tier 2 Wall Street institutions that have a crypto desk, or exchanges that have large balance sheets. We don't lend, like if you are a $5 or $10 million hedge fund and you want to borrow coins from us, that is too much risk for us. That's not the type of customers that we're looking for. Now, some of our competitors do that. Some of our competitors go and lend to the smaller guys. We're lucky that we, again, invented this category and basically established the business with the largest players. So we are working with the best and not with the riskiest.
Okay, here's a good question. Why do institutions choose to borrow from you over decentralized lending platforms like Aave?
Sure. So if you're Goldman Sachs, which just opened a desk in London, you cannot use Aave. You cannot go to your compliance department and say, oh, I need to open a MetaMask account. I'm going to move $100 million of the bank's money there, and then I'm going to put it on Aave. So Aave is great for the retail person. It's great for a small family office or for maybe a small hedge fund. But I don't know a single institution, not one, that can legally use Aave and still stay compliant or comply with regulations or anything like that. So what Celsius is a bridge. We have one leg in the centralized finance world, CeFi, and one leg in the decentralized world, DeFi, and we move billions of dollars between them in a way that is compliant. Again, every one of our customers does KYC. We do continuous AML on all of our users. And through that, we stay compliant to the financial world and all the requirements of regulators. And at the same time, we have access to these yields that are just not accessible on the other side.
What are your views on the 100% plus APR available on some of the yield farming strategies?
So look, anything that's too good to be true is. And if you've seen, almost every day, there's a rug pull, there is money being lost, there are scams. So if you're lucky and you have some magical power of jumping from one to the next and never get burned, then you should do it. But most people don't have the time or the understanding or the technical understanding of figuring out who is safe, and what is not safe. Celsius has several $1 billion on DeFi in farming and in mining. And I can tell you that we are sticking only to the safest platforms, and those platforms usually will not yield more than 12 to 18%. If something is paying you over 100%, you have to ask yourself, where is that yield coming from, right? If you cannot explain exactly how the yield is created, then don't touch it.
Okay. Can you share your credit criteria that you use to screen institutions you lend to? Or are there any minimum thresholds that you could share?
Sure. So normally, again, an institution has to onboard with us. So we check the institution itself. We check the principals, the people who actually are in charge of the institution. We look at any licenses or regulatory requirements that they follow, how long they've been in business, and then what are the strategies that they are using. So they'll tell us, oh, we're doing arbitrage. Great. Which exchanges? Good. Okay, so let me put coins for you on those exchanges, right? So, and we can control those. We announced several partnership with X Margin and several other with Copper and a few other companies where we can effectively, even though we're giving these assets to exchanges or hedge funds, we can control the asset on the exchange, right? So we know that it's not being moved or used for purposes that are not intended. So we have to know the strategies, we have to know the allocations, the sizing. If somebody wants to take a super leveraged position on Bitcoin, a directional position, we just don't do that. And we mark that institution as a high-risk institution. We have close to 12 people in our risk department, and they watch continuously, not just approving and looking at risk allocations, but also pulling back. Like we just recently, one of our institutions had I think something like $600 million deployment, and we felt it was they were taking too much risk. and the markets were too volatile, and we pulled half of that back, right? As an example. So we take proactive measures because we know we can always take those coins and deploy them somewhere else. And for us, the most important thing is to make sure that we can always return all the assets to all of our customers. Also, our balance sheet, Celsius balance sheet, is over $2 billion on it. So, which includes our Cell token and Bitcoin and cash and so on. So today, Celsius with over 300 people, $2 billion balance sheet, 21 billion in assets, is the safest play in DeFi. I would say, no, I don't know anyone else in this business that can give you these kind of numbers. And we're profitable. So we're probably one of the very, very few companies in this business that is profitable.
Okay. So do the stable coins that you lend out have inflationary characteristics?
So the issuers of the stable coins, in almost in all cases, we have, I think, 14 stable coins. They're always trust companies. So either New York Trust or other type of trust or banking institutions. And so they're pegged to the dollar. So whatever inflation the dollar has, those currencies are pegged with the same inflation. They don't have their own characteristics since they are pegged to an underlying fiat currency.
On the institutional side, is it collateralized?
Yeah, so we have even the largest institutions provide us collateral, and the collateral varies between 50 and 150%. It depends on how much, how the size of the balance sheet, and again, the risk involved with the deployment, and do we have control of the assets or not. But if you are like a small hedge fund from Asia, if you manage to pass through our KYC ML, we'll probably require 150 to 200% collateral if we loan you any coins.
So how many cryptos do you pay interest on, and like how many do you add per month, quarter, and yearly?
So we currently support 45 different assets. We add assets based on our ability to pay interest. So for example, we were the first in the world to add gold tokens, tokenized gold. Gold existed for 5,000 years. It has never paid yield. It never paid interest. And Celsius solved that problem by enabling gold on the blockchain to earn positive yield. We're now adding BNB, we're adding ADA. So we continuously add assets. Sometimes it's 3 or 4 years. Sometimes it's more than that.
Okay. What is the average term of your secured loans from your borrowers?
We don't really have a term. I mean, most of these are on-demand loans, but the average probably would be between 1 to 3 months.
Nice. Okay. We got some questions about comparing you guys' payouts to Gemini. Can you kind of give some color on that?
I think we beat Gemini on every coin on every term. Yes.
Okay.
Look, Gemini is a great exchange. They obviously have their own stable coin, which we support. They're new to this game, right? So they're basically, I think they were using BlockFi, and BlockFi lowered their rates by, I think, 90%. So Gemini rates are not competitive anymore. They should use Celsius instead of BlockFi.
Do you self-offering financing to go long Bitcoin? Any regulation around it?
So we do not do leverage. We don't. We're not financial advisors. We're not a broker dealer. The only two services we provide are margin borrow of dollars. Sorry. Or again, basically coin lending to institutions.
Okay. All righty. We have a question about, do losses hit the balance sheet before depositors?
Yeah, so we have 2 programs. One is we call self-insurance. So we are creating an internal insurance pool If you opt into that, we will use this is only covering, it's only for counterparty risk. And the other pool is if we make a mistake or anything happens that is our fault, then we will use our balance sheet to cover any losses.
Can you provide liquidity coins directly to exchanges? You may have covered that before.
Yes, so we provide liquidity to multiple exchanges. Since basically Celsius started this business, the balances on exchanges have dropped dramatically. Most people scratched their head and said, why am I keeping my Bitcoin or Ethereum on Binance? I can move it to Celsius, and then Celsius will lend it to Binance or lend it to Bitfinex or lend it to some other exchange. So the math is pretty simple, right? The hard part was aggregating enough users to have an impact, right? And today, balances on exchanges are half of what it used to be 2 years ago because tens of billions of dollars moved off exchanges to companies like Celsius.
That's great. What's the minimums?
There is no minimum.
Okay.
And there's no maximum either.
Okay. Someone asked about your token. I know you guys have a token. You want to talk about that? It's had a great return too.
Sorry?
And it's had a great return, I've seen.
Yeah, it was the best performing token or coin of last year. So Masari, which is like the Bloomberg of our industry, ran a report analysis, and the Cell token was the best performing token. It's doing very well this year as well. We publish all of our data daily in our app and on our website, so you can see the growth in users, the growth in deposits. And again, it's a limited supply token. We don't have a mining operation. We don't have farming. We don't have any of those things. So you have a fast growing community, limited supply of tokens. What do you think is going to happen?
Yeah, we got about 3 minutes left. A lot of questions still coming in. One was about, can you go ahead and give the ticker or the symbol for your token so people know?
Yeah, CEL, Cell.
Can your product be
First
white
three
labeled?
letters of our name, Celsius Network.
Okay. Can your product be white labeled?
Yeah, so we have an API program, a partnership program using APIs. We are the underlying provider for Voyager, for Bitfinex, for Liquid, a dozen other partners. And if you go to our website and you look under partnerships, you will be able to basically fill up some forms and get access to API keys and offer these services to all of your customers as well.
Okay. Can you transfer Bitcoin from Cash App to Celsius directly?
I don't know if you can withdraw from Cash App, but if you can, then there's no problem. We give you an address, you just move it from one address to the next. The minute it hits us, you start earning interest. You don't have to do anything, right? I mean, in DeFi and all these other things, you have to get in there every day 4 or 5 times and move stuff around. With Celsius, you just earn interest every Monday. You don't have to touch it. You don't have to, farm it. You don't have to water it, harvest it. It just happens.
Okay, so it's 1 minute left. Is there anything you want to tell people, maybe how to get in contact with you, your social media, anything else?
Sure. So definitely, again, website is celsius.network. And we also have, basically come join us on our Telegram channel, our Twitter, Celsius Network. Download the app from the App Store or on Android. And we have a show every Friday on YouTube, brought to you live at 1 p.m. Eastern every Friday, where we do Q&A and answer detailed questions about anything that has to do with Celsius. And, we would love to have you join the community.
Awesome. Well, thank you so much for your time. I'm going to turn it back over to Michael. Michael, you there?
Thanks for having me.
Hey, Alex, thank you. And congratulations on the success and, very well done, the presentation and the Q&A. Thank you so much for coming back.
Thanks for having me, and we'll see you next year.